Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Hey, good afternoon, folks. We are working on your financial freedom, and today we're with a Lifestyles member who bought back his time and his peace of mind and created the life he always wanted. I am your host, David Ruzicka, and you're listening to the Lifestyles Unlimited Real Estate Investor Radio Show. And I'm with Richard Coates of Clearwater, Florida, and we're going to hear his story. And like I said at the beginning, we are working on your financial freedom. Richard, so glad you're with me today. Good to talk to you over the phone and then here on the show. I want you just to take a moment and introduce yourself to the audience, who you are apart from real estate, kind of where you grew up. I know you're a big wrestler and all that kind of stuff.
Yes, thank you, David. Thank you for having me on the show. It's quite an honor to be on your show, joining you today. Yeah, I'm just your average guy. Grew up in Washington, D.C., went to high school in suburbs of Virginia, and fell in love with the sport of wrestling and was very successful in high school. Won the state a couple of times and went on to Virginia Tech on a wrestling scholarship and earned a civil engineering degree. And then I went into that corporate America rat race grind for the next 30 years.
And I like the way you say, I'm just an average guy who, oh, by the way, got a full ride on a wrestling scholarship. That's not an average guy. That's kind of, that's a little bit extra. So you actually said you moved across multiple states for your job. How many states did you work in? How many times did you move when you were working as a civil engineer?
Sure. Yeah, I've lived in Virginia, Georgia. I moved to Florida twice, and that's where I ended my corporate career down here in Clearwater, Florida. So I just kept chasing that promotion, climbing that ladder until one day my boss told me I had a great run, but my run was over.
I like that. Hey, by the way, you had a great run. By the way, we're done. That's funny. So when you were laid off, though, you actually had, well, first of all, let me ask you this. Before you discovered real estate, what was your investment strategy? Did you have an end game in mind in terms of retirement? Was that ever going to happen for you?
Yeah, I didn't really pay a whole lot of attention to it. I just did like everybody else, threw money into a 401 and hoping that it would be a big pile of cash at the end of the day to retire on. But as I started advancing in age, I just wasn't comfortable with the results I was getting. All the money I've thrown into it over the years. I wasn't comfortable with the volatility of the stock market and all the unknowns. So a few years before I ended my corporate career,
Hold on just a second. Hold on. I need to prepare the audience because you're going to say something blasphemous right now. And it's funny because the last couple of shows, we've been talking about this and people started to get the vapors because you're going to touch that holy grail of investing, that 401k. But before we get there, I want to point out something. You said, just collect that money, have a big pile of cash. And experts will tell you should have between $1 million and $1.5 million by the time you retire, which is tough because the average 60-something-year-old has, I want to say, about $179,000 last time I checked. But even if you have $1 million, let's say you could earn you're going to earn what, about 1% on that in the bank right now, which means you will be living off of $10,000 a year. And my guess is if you're able to accumulate $1 million, you are living a lifestyle that's a lot more expensive than $10,000 a year, which means you're going to be living off of the principal and hoping that you die before you run out of money. And so you had a little different thought, which is good, and you're thinking, and how did you pull your money out of your 401k? How were you able to do that?
Well, I actually moved it initially into a self-directed IRA and started investing in real estate. And then as I became more educated with lifestyles model, I realized that probably wasn't the best move I made. So later on, I started pulling things out of my IRA and investing directly and taking advantage of some tax savings that I wasn't able to take advantage of while I was in a self-directed IRA.
Yeah, and we're going to get to that too, because I know people are sitting there thinking, "Oh my goodness, I can't believe you took your money out of that tax shelter, that IRA, and ended up paying taxes on that." And yet, with real estate, you can do so much better, and we're going to find out you did do so much better. So you actually bought 2 single families and a 6-plex. And this is before you ever heard about Lifestyles Unlimited. You just did this on your own. What kind of preparation did you do for that?
Not enough, for sure. As I look back on it, I surely wish I had been introduced to Lifestyles Unlimited before I made these acquisitions, because I would have did it differently. And I would have maximized my returns better. Although I did fine, no complaints. Nice thing about the real estate, it's very forgiving, and it outperformed if I had stayed in the 401k. So I'm very happy with the results, but for sure I could have did better.
How did you finance those properties? Did you pay for them all cash? Did you do hard money loans?
I paid for them cash, and because I couldn't take advantage of any tax advantages in a self-directed IRA, nor could I easily leverage money in a. You can, but it gets complicated tax-wise.
Right.
So I just decided to go cash.
Hold right there. We are on the line with Richard Coates, and we're going to come back to the other side of the show and hear how he bought back his time. You're listening to Lifestyles Unlimited radio show, and I'm your host, David Ruzicka. The Lifestyles Unlimited Real Estate Investor Radio Show. We're with Richard Coates of Clearwater, Florida, a Lifestyles member who, before he ever discovered Lifestyles, began investing in real estate, bought 2 single-family homes and a 6-plex, which is actually considered multifamily. Anything 5 doors and above is considered multifamily and is valued differently than single family. Single family is valued using what is called a comparative market analysis. Multifamily is a business, and it's valued based on how much money it makes. Now, I'm interested, Richard, because you said you got tired of the up and down of the stock market, and you decided to do real estate. You did it on it. Where exactly geographically, where were you when you bought these houses, and where are they located?
I was in Florida, and the properties that I bought was in Florida. Except for one I bought up in Virginia. Had opportunity to get some significant equity capture, so I took that asset on.
Yeah, and so I wanted to point that out because a lot of people say, oh, Lifestyles is just in Texas. That's the only place. We actually have people invest all across the country. We say live where you want, invest where you need. One of our single-family mentors actually was living in Miami and bought houses in Texas. And, of course, here now you hear Richard, you bought houses in Florida, and you said Virginia was the other?
That's correct, yeah.
And did this without any outside help, just did it on your own. Actually, you were successful at it, discovered how to make a little more money after you joined Lifestyles. But we do say you don't want to invest in, for instance, landlord unfriendly states like California. California, somebody moves in, they decide not to pay rent. Too bad. They own your house. They're going to stay there forever, and you're never going to get them out. Same place, same idea with New York. There are certain places you don't want to buy single family houses, or they're just too expensive. Now, you were successful because of something that we teach here at Lifestyles that maybe you were not, I don't know if you were aware of it at the time, but it's the 5 ways that we make money through real estate. Do you remember what those are, Richard? The 5 ways that you're making money on those deals?
Sure. Yeah, I just mentioned one is the equity capture. When you purchase the property correctly and realize some of that equity capture going into the deal, you make money. You increase your net worth when you do that. So that's pretty cool. Just by signing on to that deed, you enrich yourself. And then cash flow is what really sets, in my opinion, real estate apart from the rest. That monthly cash flow you get in, which is very comforting because you know you have that monthly income coming in, whether you decide to get up and do something or not. So I enjoy that.
One of our members, he said real estate is like a warm blanket. I thought that was so funny. And it's because he's getting that cash flow all the time. And we say must have cash flow. Makes all the difference in the world. Your 401k, your IRA, did those things ever give you cash flow?
Nothing.
In the stock market?
Not at all.
Nothing.
No.
Nothing. No. Okay. Shocking. No. I'm shocked. I'm surprised to hear that.
Yeah.
But I'm being sarcastic. Go ahead with the other ways you make money with real estate.
So the third way is one of my favorite. Is tax savings that you get on depreciation that the IRS allows you to depreciate your property on your taxes. So that's actually one of my favorites. I guess because I grew up in D.C. and I always tell people we have taxation without representation. So I really enjoy the tax savings of real estate. The fourth one being the principal pay down on the notes you have on this property. Every month your tenant pay you rent, and you take a portion of that rent and pay down the principal owed on the property, and therefore increasing your net worth year after year. And then finally appreciation. You know, every year real estate value goes up anywhere from 5 to 10% on the average, and it always outpaces inflation. So, like right now, we're in high inflation. Real estate is increasing at a higher rate than inflation. So, it's really a great protection. Great protection against your inflation. So, money sitting in the bank gets killed by inflation.
Yeah. What about buying gold? Would you just buy gold?
No, I wouldn't buy. I wouldn't buy anything that doesn't pay me. Put money in my pocket every month.
Exactly right. Exactly
Cash flow
right.
is important.
I asked you that because I knew what you'd say. Yeah. No, gold is a horrible investment. I don't know why people buy gold. If everything goes to pot, they say, "Oh, at least you've got your gold." No, if everything goes to pot, you need lead. You need lead for your gun. If everything goes out the window, you don't need gold. Gold's not going to help you any at all. So you did all that. So you got the equity capture, you got the cash flow, you got the depreciation, tax savings, principal pay down, and appreciation. And you kind of discovered all that even before Lifestyles. And then you actually tell us how you heard about Lifestyles. What got you? You actually went to one of the free workshops. How did you find out about that?
Yeah, after listening to Dale on the radio for about a year or so, he announced he's coming to Tampa to do a free workshop. So I was all excited, put it on my calendar, and went out to the free workshop and just listened to the Lifestyles philosophy and how they bring investors together to join their resources and go after bigger deals. Really was exciting to me. So at that point, I decided to join Lifestyles as a financial freedom program member and sign up for that 2-day course and learn some more about the organization.
Yeah, and so folks that are listening, back then, you had to wait until we came to your town or, within a 3 or 4 hour drive of your town if you wanted to go to that financial freedom seminar. It just wasn't available. We could send you a recording, via email, but it was a little tougher. Now they're all live streamed. The free workshop is live streamed. I'm one of the presenters. In fact, the last one you can go to this year is this coming Tuesday, December 28th. It's going to be at 6:30 Central Time. All you got to do is log in. You don't have to get up and go to the office or anything like that. Don't have to get dressed up. You can watch it online. I think Al Gordon is going to be doing it, who's another one of our radio hosts, and a great opportunity. So I'd encourage you to go to lifestylesunlimitedworkshop.com. lifestylesunlimitedworkshop.com, and you'll hear more about the 5 ways we make money with real estate, see some actual real-life examples and some case study examples of members who have actually done their investing. So you got to the workshop. You actually got to, at that time, Dell actually did the free workshop. You went to that 2-day financial freedom seminar. You went with, I think Brian Sifford was teaching that one in Atlanta. And again, something you had to wait for till it came to your area of the country. Now you can see we're still doing them. We're still going out and doing them in person, but we also live stream the 2-day. Hold right there. I want to go on with the rest of it with Richard Coates here. We're talking about his real estate investing and how he bought back his time. You're listening to Lifestyles Unlimited Real Estate Investor Radio Show. Folks, I'm your host, David Ruzicka. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show. And today I've got with me Richard Coates, a Lifestyles member who is invested in a whole lot of passive deals and has changed his life through real estate investing. Actually started doing it on his own, doing it through his IRA, bought 2 single-family houses and a 6-plex. And you heard before the break, or if you didn't hear before the break, he was sharing how he was attracted to it because he was able to make money in 5 different ways: through the equity capture, through the cash flow, through the tax savings, the depreciation, through the principal pay down, and through the appreciation. You can't do that in the stock market. It's either the stock goes up or it goes down. If it goes up, you make money. It goes down, you lose money. That's it in game. And so, Richard, you joined, excited to do that. Lifestyles Unlimited came to Atlanta to do the 2-day financial freedom seminar. And folks, if you're listening for the first time, that is 2 days. It's single family and multifamily, how to locate, negotiate, finance, rehab, lease, and manage single family properties and multifamily properties. The majority of our members use this right here to go out and do their real estate investing. They don't need any more training. They go with that and they go out and begin investing. And so during that 2-day seminar, Richard, what were the big aha moments for you? What were the things that really stood out, kind of grabbed you as you were there? Because you already had, as we talked about, had a little bit of experience with real estate, so this wasn't all brand new to you. Like, for instance, when I went, everything was a big aha moment because I had never experienced any of this before.
Yeah, I tell you, but the multifamily stuff was foreign to me. I didn't really, although I owned a multifamily, I didn't even know I owned one at that time until I got into Lifestyles Unlimited.
You just thought it was a duplex time 3.
Yeah. So I'm sitting in the multifamily session of the 2-day, and Brian started talking about forced appreciation. And that really intrigued me. I said, forced appreciation, what is that? Well, in multifamily, you can force the value of your asset just by managing it better and producing more income out of it. And that increases the value of your property. So that was a big aha moment for me. And the second one was... Wait,
let me pause. Let me get you to pause there for just a second, because that is huge. That is huge. With single family, you can't force the property to appreciate. I mean, you buy a piece of property that's beat up, you can fix it up, and it will be worth then what the average selling price of a house in your neighborhood is worth. That's it. With multifamily, it doesn't matter what the apartment community across the street sold for. What matters is how much money does yours make. And here's kind of the golden rule of multifamily. A 10% increase in income results in a 100% increase in equity. A 100% increase in equity. That is huge. And it's really amazing when you think about the fact that Lifestyles Unlimited has produced the top performers in the U.S. in the National Apartment Association since 2007. Every single year, we have had one of our lead investors go out and win the top award for their category. So we help people to be in that, to get that 10% increase in income and force that property to appreciate. So, yeah, that is huge. That's huge. And then what was the other piece that really stood out to you?
The second thing that really stood out to me was that you could accelerate your depreciation all I knew being owning single family that you got to depreciate over 27 and a half years. Well, I learned in 2 days, no, you don't. You can crash that thing down by using a technique called cost segregation, which is a technique used in multifamily owners to increase their write-off. So I was extremely impressed by that. And the fact that it takes a combination of a CPA and an engineer, which I am, was actually very interesting and enlightening to me because I had just never heard of the concept. So that was another aha moment for me.
Yeah, you greatly increase your tax savings on that deal. As a passive investor in real estate, you're in the lowest for-profit tax group in the United States. And there's a reason for that. It's because our legislators write the tax law. And guess what our legislators have a lot of? They got a lot of real estate. And so they write the tax laws to benefit themselves. That's why they're all rich. And so we benefit from that. And like you said, Richard, with regular depreciation, it's over 27 and a half years, but you can crunch that down, make it really tight. And we have people do that all the time. Now, what was the what was the educational process that got you started once you went to that 2-day class? You said, okay, I'm going to be I'm going to be a passive investor in deals that a lead investor is leading. What I mean by that, let me go ahead and explain that. A lead investor is someone who says a Lifestyles member, not an employee of Lifestyles. They're just a member. They say, I'm going to go out and find a property, a big property, and I'm going to raise money from other Lifestyles members. I will do all the work for a small override, and we share the benefits equally of the investment, the forced depreciation, the cash flow, the depreciation, all those things. We'll all share that, but I'm going to do all the work. And so you decided, first of all, you want to be a passive investor, correct? In
That's correct.
Deals. Yeah. Why did you decide that?
Well, I decided that because it's all about how you want to spend your time and how you want to maximize your cash that you want to invest. And there's two things about Lifestyles I really like. First of all, is the quality of the members in the organization. They're high quality, high integrity people that I would like doing business with. And then Lifestyles, what they call the white paper, which is a set of rules that really protect passive investors. I was really impressed with it. All the lead investors agree to follow. So as I accumulate cash flow from my assets, my houses that I own myself, I take that cash flow and I invest it in passive deals with other Lifestyle members. And it's really, it just really works out well for me because it frees up my time to work on stuff I want to work on. And while my money is still growing at a very good rate.
Like something you said you like the quality of the members of Lifestyles Unlimited, and especially like those lead investors who follow the white paper. They're the rules that they have to follow. And that was all fostered by Del Walmsley from the very beginning. He said, we're going to set this up to protect the passive investors because there are a lot of people out there that do syndications and, they take money in 5 different ways. And by the time you get your return, it's a pretty small return. Or I should say it's dramatically smaller than it could be. And so he set it up that way. I've seen Del. He is all about ethics. And I have seen him just take somebody down publicly because they said something that is unethical in a large meeting and that we do not want to do. And we don't do that representing Lifestyles. And I've seen him actually in the video that we showed before the free workshop. He does exactly that. He says, if you want to do something like that, you need to not be part of Lifestyles because we believe in ethics. We believe in treating people right and making money in an ethical, honest way. And I love that about Lifestyles because you never have to be looking over your shoulder wondering what's coming up behind you if you just do things right. And it makes such a difference. And it makes for a much more peaceful lifestyle as well. So you went to some of the educational road shows or the acquisition road trips for your training, right?
Yes, I did. After I took the 2-day course, I really took my time to check out the Lifestyle organization and the members. So I spent, almost a year just traveling around the country to road trips. I went to them in Atlanta. I went to them in San Antonio and a couple other different places. Went to 2-day events all over the place, just trying to do my due diligence on the organization and so forth.
Richard, hold right there if you will.
Sure.
On the other side of the break, we're going to hear a little more about that. He went to the educational road trips where we teach people how to evaluate multifamily properties. We'll tell you more about that on the other side of the break. I'm your host, David Ruzicka. Remember, it's not the money, it's the lifestyle. Hello, folks. I'm your host, David Ruzicka. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show, and we're with Richard Coates of Clearwater, Florida, who has invested in a bunch of passive deals and joined Lifestyles Unlimited, and before he got into any passive deals, he went to something called an educational roadshow. And Richard, I want you to explain what that is and how that helped prepare you, because we do that for all of our members who want to be invested into passive deals. Tell us what that experience was and what you learned from that.
Sure. Yeah. So one that I went to was in Atlanta. Went up there, and it was a group of lifestyle members that we toured one of the lead investors' properties. And the lead investor shared with us how he acquired this property, what kind of returns he was getting on this property, and how he was managing it. He just opened everything up and just let us know, showed us what was going on, how it worked, and everything. And it was a really great experience. And that particular lead, I actually ended up investing with at one of his later deals. I mean, you get to sit down and meet the lead, have lunch with them, get to feel comfortable with them. So it's just a great opportunity.
And the other thing there that happens at those road shows is there is a mentor there who actually is walking through the numbers as well and is pointing out all the highlights. It's somebody who's actually trained, who's in many cases is mentoring the actual lead that has got the property. And so great educational opportunity, getting in the nuts and bolts. And where else can you go in the world where someone says, here, let me open up my books to you so you can learn to do this yourself? That's the power of Lifestyles Unlimited. That's the power of that community. And how much extra did you pay to be able to go to that road show?
I don't remember having.
You didn't pay anything. Yeah, you didn't pay anything. You paid for a plane flight, maybe, or a drive, gas drive. That's just part of the membership. So, so you did that, and then how did you find your first passive deal?
Well, that particular lead actually that did that road trip, I networked with him, and as soon as he had a deal come open, I contacted him and said, "Hey, Brian, this is Richard. You know, I was on your road trip. I'm interested in investing in this deal." And through that connection, when the slots came open to invest, you know, I got in on that deal, and that's been a beautiful deal. Pays out distribution like clockwork. Just a really beautiful deal. Other deals I've gotten into, I've made connections at the expo, the annual expo we do every year. So just different networking opportunities.
Yeah, and what he's talking about is Expo. We have every single year. It's 4,000 to 5,000 people. It's the largest gathering of successful real estate investors in the country. It will take place in March of 2022, and it will be here in Houston, Texas. Last September, it was in Dallas, in Irving, actually. So great opportunity to jumpstart your real estate investing, and a lot of opportunities to network, just like Richard is talking about. And we've actually added additional ways to network online as well, as everybody did during COVID. It was a horrible situation, but also we were able to ramp up a lot of the things that we were doing online. Now, how many deals are you in now?
I'm in 6 passive deals. I try to get into a couple of deals every year based on the cash flow I'm receiving, not only from those passive deals, but the single family and sixplex that I own. Because I don't really, although I could live on my cash flow, I don't have to. I have to do enough projects to support my lifestyle. But it's nice to have the feeling if you don't feel like doing anything, you don't have to do anything because you got enough money coming in to live your lifestyle.
And then you did something. You bought a single family home last year, another single family. Why did you do that?
Yeah, I did that because I was making a significant gain on some property that I owned, and I didn't want to pay the huge capital gain tax that I would have paid just by selling that property and putting it in the bank. So I did what's called a 1031 exchange into a single-family house that I purchased in 2022 to just add to my, monthly cash flow. Very nice cash flow producing property.
And so you did that 1031 exchange. So how much in taxes did you pay on the sale of that? And you said you had a pretty substantial gain, huge gain on that property. How much in taxes did you pay on that sale of that property?
Zero. I told you I love saving taxes.
You ever buy a stock and sell it for a profit?
Yeah, you pay capital gains tax on it.
Yeah, can you do a 1031 exchange from one sale of one mutual fund into another?
I don't know if you can do that or not.
No, you can't. The answer is, of course, not. You can't do that.
I'm an engineer, not a CPA. I just know real
estate. You can only do that with real estate. That is huge. We teach you in that 2-day class, defer, die. Because you can keep 1031 exchanges all the way to the point until you die. Then you can pass it on to your kids, and they don't have to pay capital gains either. They get that property at the whatever the current value of that property is at that time. So you never pay taxes on that if you do it right. Huge deal. So great job on that. And I wanted to mention something. You go to a big bank and they take your money, and if you have enough money, they may say, hey, you can talk to one of our financial advisors over here and invest in mutual funds that'll be very safe and very conservative and very low risk. And you say, really? Wow, low risk? That's awesome. And so you go talk to the financial advisor. Let's say you invest $50,000 and it increases 20%, and now it's $60,000. You say, hey, I'd like to take out a 30-year mortgage on this. I'd like to refi my mutual fund at 3%. They say, are you crazy? We don't do that. It's too risky. Wait, what? Too risky? And they'll say, oh, well, no, I didn't mean that. But I can do that with single-family houses. I can do that with apartment communities. Why can't I do that with mutual funds? That's the difference between real estate and the difference between investing in a mutual fund. People have this mindset that investing in the stock market is somehow safe and secure in that 401k. And yet the banks know the truth because they will loan you money on the real estate. In some cases, in a VA loan, up to 99% loan to value, but which we don't suggest. But with the stock market, they won't loan you. They won't do a 30-year mortgage at 3%. That's for sure. So you did that, you're doing well, and then you ruined my life a little bit because before I used to go to Florida to do the free workshops, and it was a lot of fun. And you actually became a free workshop presenter. They thought, hey, it'd be great to have somebody that can go to Jacksonville that actually lives close. And so why did you become a free workshop presenter?
Well, I found myself talking about lifestyles and talking about real estate to all my friends and family, and the benefits of owning real estate and so forth and so on, and just how it has changed my life. And when lifestyle started growing really fast nationally, there was an opportunity to join the team as a free workshop presenter. And I just felt like that was something I was sort of doing informally anyway. And this is my way of getting back to the organization that's meant so much to me. So I really enjoy getting to travel around the country and give this free workshop, which changed my life, to help change other folks' life. It's just a give back opportunity.
Yeah, and you do a great job at that. Only bitter because I don't get to go to Miami anymore because of you. Because you're doing the workshop. Great job, though. So tell us, what is your current lifestyle, and what happened in October?
Yeah, so October, I had a big birthday celebration, and I was able to bring about 40 family members down to Florida. I rented a bunch of beachfront houses along the beach at our beautiful beach community here. And we just celebrated for about 5 days down on the beach. And that was just my way of, telling the family some of the things that I'm doing and how real estate changed my life. And also, I unveiled a foundation that I created in October in honor of my mother for my birthday. I created a scholarship foundation to help non-traditional students further their education. So that was a big, big deal, big milestone for me. Just another way of giving back.
Yeah, I love that. I love that. Folks, that's what it's all about. Del Walmsley says it's not the money, it's the lifestyle. And you hear from a guy like Richard Coates, who has bought back his time, who has financial security, is able to bring his whole family down to the beach and actually set up a foundation in honor of his mother. Remember, folks, you can't get rich slow, must have cash flow. Join us with Lifestyles Unlimited, lifestylesunlimitedworkshop.com, and go to one of the free workshops. We are working on your financial freedom.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.